My next guest sees oil prices heading higher. He is Lawrence Eagles, Global Head of Commodities Research for JPMorgan. Lawrence Eagles is also the former head of Oil Markets Division at the International Energy Agency. Lawrence Eagles, welcome to Bloomberg.
Hi.
Laurie, why do you think that the price of oil is going to climb? Is there real fundamental demand for oil and oil products?
I think we've got to look at the seasonal factors coming into play. I mean, not only did we had the financial crisis, we also had the peak of seasonal maintenance and also the trough in annual demand taking place at the same time in April and May. And as a result of that, you start to see a normal build in stocks, markets start to get pressured. We also had the structural problems of WTI in the Midwest and the regional oversupply of crude there, pushing that crude benchmark down to low levels on a spot basis. But now things seem to have stabilized a little bit. We've got to start looking at the supply and demand fundamentals. Refineries are coming out of maintenance. They're going to be using more crude. People are going to be driving more during the summer periods, and the economic numbers that we're getting out are still very, very robust. And with that, it should start to tighten the crude market and I think pull prices up a bit.
All right, so what kind of price point are we talking about? I mean, $77 a barrel for crude today. Where do we go now?
Well, I think one thing that we've got to temper is our expectations on the price side. I mean, previously we were looking at prices in the third quarter going at over $90 a barrel. But when you start to take the currency adjustment into account, the peak that we saw at the earlier this year of $87 a barrel is probably the equivalent of around $80 a barrel now. So as a result of that, you've got to manage lower your expectations of the upside.
Now, if we were to look at Cushing, Oklahoma, where the contracts for crude are actually settled, wouldn't we see just huge amounts of supply? I mean, isn't there just almost no place to put it anymore? They've got to put it in offshore tankers.
I think that is well, offshore tankers isn't something that you can do in the US Midwest. We're seeing with WTI, it's essentially a gathering point that is coming in for Canadian oil sands, some of the new shale oil sands coming in from the Bakkens, and US production as well. And what it used to do is pull oil up from the Gulf Coast into the Midwest, which made it a perfectly representative benchmark for all different areas. But when you actually get your tanks full, when you have this very large amount of supply coming in from Canada and domestic US production, it starts pushing out some of the usual demand from the US Gulf Coast. As a result, you can get a shift and a dislocation going on between WTI prices and other benchmark crude prices such as LLS in the Gulf Coast or Brent. And I think we've got a real risk given that we're still towards.
We're gonna have to leave it there. I'm sorry, Larry Eagles coming to us from JPMorgan Commodities.